Welcome. My name is Van Richards. I'm a chartered financial consultant, and I'm here to help you identify stocks that can help you accomplish your financial goals. And today we're going to be talking about a stock that was requested by one of you, the viewers, one of you, the listeners to this program. We're going to be talking about ExOne. So let's go ahead and begin in today with today's daily stock analysis. Thank you for joining me. If this is your very first time to visit, or if you've repeated coming back and you've put off subscribing to the channel, go ahead and subscribe. If you're listening to this on a podcast, go ahead and hit the subscribe and follow button. I think that you're going to find a lot of good information. I've been a little bit sketchy recently about adding new information in because of certain things that happened here in Texas. We're dealing in our home with broken water pipes because of freezes and all kinds of different things like that. So I'm coming to you this weekend to kind of catch up just a little bit. And this is a company that I'm going to talk about that was requested by one of you, the listeners. So I want to pay special attention to that. Now, as we begin into this today, though, I want to start off and say thank you to our first sponsor, which is my company, which is Richards Financial Planning. And I want to do it in this way. I want to ask you this question. Have you ever heard anybody say, I regret sorting out my finances? That's because nobody ever says that. Nobody on earth. You can control your financial future. You can control it with a financial plan that can ease your frustration. And you can find out more about that over at our website at richardsfinancialplanning.com. So let's go ahead and begin talking about ExOne just a little bit. I think it's important anytime that you're going to be talking about a company that you may potentially be investing in to learn a little bit more about it. Now, I know that some of you probably know more about this company than I do. So bear with me just a little bit because I want to bring everybody up to speed, because there are people that are listening that have never heard of ExOne and they really don't know exactly what they do. So that's what we're going to do for just a quick minute. We're going to learn a little bit more about what ExOne actually does. The company services industrial companies. They have 3D printing and 3D printing products, and you really have two primary applications: direct metal and indirect sand. Now, direct printing produces an actual component that's used in industry. On the other hand, indirect printing makes a tool that can be used to produce a component. They have actually two different locations. One is in Gustafsson, Germany. Hopefully I pronounced that right. It's right outside of Munich. And then the other one is in North Huntington, Pennsylvania, which is right outside of Pittsburgh, close to where I went to college at West Virginia University a long, long time ago. The company right now is worth about $752 million. And I find it very interesting to follow companies over a period of time, not just the stock price, but actually the value of the company. When I started following this company about 2 to 3 weeks ago, they were worth over $1 billion. Today, they're down to $752 million. Now, don't take that as a negative, because what I want you to do today is I want you to look at the company from the perspective of what their potential is going forward. You're going to see where they've come from and where they are now, and there are some particular dangers in value, and we want to identify those. The company has a restricted trade requirement on it right now because it's very, very active. It was down in trading after hours last night. It was about, let's say 7:58 p.m. was the last trade that I saw, and it was trading at $34.10. It was down about $2.74 for the day. Now, anytime that we look at a stock, what we try to do is we try to identify the stability, the earnings, and the competitiveness. Now, this is going to be a little bit different today because we're not going to be very positive on some of these things. And it's hard to say, don't take that as a negative, because there is potential with this company, but when you buy it could be a big question mark. So we want to talk about those three things: the SEC, the stability, the earnings, and the competitiveness. One of the biggest unknown factors that's affecting ExOne right now is the coronavirus, the COVID-19 pandemic. And if you read through a lot of their propaganda, they even acknowledge this, that this has really hurt them. And if you think about their locations in Pennsylvania and in Germany, those two areas have been, let's say, quite heavy-handed in as far as lockdowns go, maybe rightfully so, but it's really impacted their business significantly. I think that the company has a very narrow moat. Now, remember that moat characteristic is something that we look for to try to judge the stability of the company. And the moat characteristic is that competitive edge. It's that barrier, and this is something that Warren Buffett started to popularize. It's that invisible barrier that's between that company that you're thinking of and their competition. And I think really for ExOne, one of the biggest things they had that gives them a narrow moat is the fact that they do have proprietary assets. And the biggest one that I think that they have right now is their binder jet technology. And if you want to learn more about that, go over to their website and you can learn a lot more about it. Another thing is the switching costs. There are not a lot of companies that actually work with industrial companies. And ExOne is one of the few that's out there. One big breaking news thing that I wanted to put out there, that if you're not aware of it, this came from the Business Wire, it was reported on February 16th, is that ExOne has signed a contract with the United States military to develop a 3D printing factory in a shipping container for the Department of Defense. Now, that's a significant benefit. It will enable the military teams on site to 3D print parts as they need them. And if they're in a battle zone, they can get the parts within a matter of 24 to 48 hours, depending upon the product, instead of having to worry about bringing it in, which could make a lot of logistical things in a battlefield example. The other thing is that we'll talk about this when we get to the bears and the bulls aspect. There are some bullish aspects of this company because of the speed of which they're able to help industry to replace parts. Okay, we're going to look a little bit for a moment at the earnings. All right, and I want to prepare you with this because when you look at earnings at first, you're in a company that has negative earnings, you might first say, hey, this company's losing money. I don't want to put money in this. Well, I'm not here to tell you that you should or should not buy, but I want you to identify the potential for the company. And let's look for some trends that are going on. In 2019, yes, the company had losses. They have about $14 million in losses in the 9-month time period from the beginning of 2020 till September 30th. Now, this is something I want you to keep in mind. We want to look at what kind of trends are going on because ExOne's going to be having a reporting earnings call coming up on actually March the 12th at 8:30 a.m. And if you go over to their website, you can learn a lot more about that. They did have losses in 2019 of about $14 million. It was trimmed down just a little bit actually in 2020 to about $10 million. So it's still a loss, but it's less. The bleeding is slowing down, let's say. When we look at it from the standpoint of the actual revenue in the third quarter, remember this when you think of this on March the 12th for their earnings call. In 2019, they had a $4.8 million loss. In 2020, they had a $2.9 million loss. Now, that's slowing down. If we see it slow down even more in the next quarter, that would be a significant positive. And we're going to talk about the perception of that going forward as far as the value on the company. One thing that I find very valuable when I'm looking at a company that's a small company like ExOne, that I would consider it an aggressive investment that does have a possibility for loss. I want to look at how they're able to pay their bills. And one of the biggest indicators of that is going to be the company's current ratio. Their current ratio actually indicates the company's ability to meet their short-term obligations. And it's really very simple. If you take the company's current assets, you divide it by the current liabilities, that gives you the current ratio. You can compare it to other companies that are similar to that. Now, the current ratio right now is at 2.79. If it's in between 1 and 2, generally speaking, that's considered a good ratio. So what's it mean when it's above 2? What it means is they're actually doing pretty good at managing their cash. The average industrial and commercial machinery company that's out there right now has a current ratio of about 1.97. So they're doing pretty good. They can pay their bills. But this is something, as the bears growl, that I want you to listen to on their earnings call on March the 12th. Watch for guidance on these different issues. They could possibly be tying money up in a couple of different areas. And what I mean by that is, if they have too much cash, they're not putting it to work for them. So look for this. Do they have too much cash? How are their receivables? Are they able to turn those over? They lease their products out. So you need to be careful that they're able to actually collect on those and that they're not getting those leases back too early. You also want to look at their inventory to see what their inventory is. And all that should come out on March the 12th. You'll look at their annual report for 2020, and that should give a lot more guidance. Now, going up to March the 12th, there's going to be a lot of speculation. And we're going to talk about that too as we go along. Another ratio to look at is the debt equity. That's the amount of money that they owe compared to the actual value of the stock. And this is a good indicator too. It's very, very low. It's 0.11. They're a healthy company. They're just not able to make a profit right now compared to other industrial and commercial machinery industry companies at 0.57, 0.11 is a good number. But all right, here's the cautionary note. I don't want to pile on, but I want you to remember when you think of this going into March the 12th, these are the things to pay attention to. They have negative free cash flow. How are they doing on that right now? How are they doing in 2020? How'd they end up the year? They had a $14.421 million negative cash flow. They had a negative net income of $13.11 million. Their margins, they're not making money. They got to figure out some way that they can actually make more profits on the products that they're selling. The industry average is 3.1%. The net margin is negative 21%. So we have to think of that and how it's going to go forward. The return on assets is also negative. So if they're not going to be able to turn this around, there's a lot of question marks out there. But this company has so much potential going forward. Their earnings have been kind of flat. They've been up and down. And if you're looking on the screen right now, I'll describe this to those of you that are listening on the podcast. What I've put up on the screen is a graph of the quarterly earnings back from 2014. And they've been kind of seesawed back and forth. They had great quarters in 2018. In 2019, it started to fall down. Going into the pandemic, it was kind of flat. So right now, we're looking for them to just keep their head above water so that they can get more customers, so that they can get more recognition, because they do have the potential to make money. Now, there's two ways to look at this company, I think. The first way is from a rational investment standpoint, okay? Now, what I mean by that, ladies and gentlemen, is this. You look at the risk through profit and loss, just like what we talked about a few moments ago. Those are fundamental characteristics. If you were just a fundamental investor, you would probably look at this company and say, there's no way that I'm going to buy this company. If you're the kind of investor that looks at this company and thinks, you know what? I think that the 3D industry for dealing with companies and this thing going on with the military has a lot of potential with it. And with that in mind, I want you to think of the behavioral characteristics. Now, what do I mean by that? there's irrational investment risk. And what I want to do is go through some of the ideas of why people make decisions on buying investments. And I'm not going to go through a whole class on behavioral investing. That'd be kind of boring. But I'm going to mention to you a few characteristics, and I want you to ask yourself this of yourself. Am I describing you in any of these? And are any of these things that I'm going to mention, are they going to be the reason that you want to buy this investment? The first thing is that we talk about is a confirmation bias. Hey, if you look at Reddit right now and you look at the different platforms that are out there for social media, that's confirmation. One person says, I'm going to buy this. Another person says, that's a good idea. I'm going to buy this too. And it piles on and on and on and on. And there's no real logic to it. So you have to be careful of the confirmation bias. The other thing is the overconfidence bias. Don't be that person that says, you know what? 3D printing is the wave of the future. It's going to be there. Yeah, you got to have a little bit of optimism and that's out there, but don't be overconfident to the point that you think that this company can't go negative, because it has gone negative recently because of the history that it's had. I'm going to talk about the history in just a moment. Hindsight bias. Don't be that kind of person that says, I got to buy this. I should have got in when it was $1 a share. I should have got in a long time ago. Don't let regrets be what drives you into this, because you're going to see in a moment, this company's up over 200 or 300%. Are you buying on top, or is there more potential? We're going to talk about that a little bit more. The other thing is called recent memory bias. If you've made profits on other investments and you're bulletproof, which we're going to talk about in a second, you think that you're never going to lose an investment. Let me say this to you. You can. Be careful of that. The other thing is called recency bias. It's called recent experiences. The thing is, if you had good experiences, don't think that you're going to be impervious to losses. They call that the hot hand bias. It's like if you were in Vegas and you're playing blackjack and you've just got one hot hand after another and you think, I can't lose. Be logical about how you're putting money in. If you're investing in this company, I really think that this is not going to be a cornerstone company of your portfolio right now. Don't put more money into this company than you could possibly lose. That's important. Now, let's talk about short interest. Short interest, remember, is when companies actually borrow the stock, sell it, and hope to rebuy it again once it goes down. And usually that's what hedge managers do when they're trying to make big profits. So be careful of that. And I'm going to talk about a little bit of this and how this could play out going into March the 12th. I don't think this is going to be as big as an AMC theater or GameStop, but be careful of it, because the trend is that there's more people starting to short the stock because the anticipation is that it's going to go down in value. The outstanding shares right now is 22.07 million. The float is 14.54. What the float means is that that's the number of stocks that are actually issued. They've got 22 million that the company can issue to the public, but there's only 14 that are actually held by the public, 14.54. Now, this is really interesting because this is the shares that are shorted. These are the number of shares that have been borrowed, sold, and the owners are waiting for the stock to go down so they can buy it again. So there are 1.08 million shares that are shorted. And if you look down at the bottom of the screen, you see that pulsating number. It's to let you know that these numbers are from January the 15th. But we've got more recent numbers. Now, the float percentage on this is 8.55, just to give you some relevance. GameStop is over 100. So we're not close to that point yet. But be careful of this. Where we were at 1.08, it has gone up quite a bit to 1.41 million shares that are shorted as of February the 12th. And I have a feeling the reason why that the share trading has had some restrictions put on it by different brokerage houses is because there are more and more people that are buying this and selling it to short it. So be cautious of that. The price could start diving going into March the 12th, unless we get into a predicament where there's a short squeeze and people just keep buying it so it goes up, a la GameStop and AMC. Right now, the short float is at 9.69. So let's keep that in mind going forward. Also, you're going to find that this is going to be a very interesting characteristic. And I've never really talked about this before, but I want to talk about the big institutions that are either buying or selling, because sometimes you can get an indication as to how these people are, their opinions are, and it's going to affect the price. Because remember, when we talk about trading stocks, the idea of trading is you have to have a buyer before you can have a seller. And you have vice versa from that thing. It's like the chicken or the egg, which came first. You have to have somebody that wants to buy it, and you have to have somebody that wants to sell it. And if it's positive, if somebody's willing to pay more, then it keeps going up. If they're not willing to pay more, then that's how the price is going to go down. I know that sounds very simplistic, but look at the statistics that's on the screen. I'll read them off to you, to those of you who are listening. What I've done is I've taken the 5 largest institutions that either own and are selling or own and are buying ExOne. Right now, the big buyers for ExOne is Polar Asset Management, State Street Corporation, Vanguard, Essex, Citadel Advisors. Those are the big 5 right now that are actually buying. When we look at Polar Asset Management, they just bought into this on September the 20th. So it's actually September the 30th in 2020. So they are new to ExOne, and they bought 494,800 shares. There's been a total of 1.1 million shares that have been purchased recently. As far as sellers, there's more sellers than there are buyers. If you look at the screen, you can see that the big sellers right now is a company that's in the news a lot, and that's ARK Investment Management. ARK Investment Management sold almost half of what it owned of ExOne. They sold 1.6 million shares. They reduced their holdings by about 40% on ExOne. So either they could be thinking, this is going to be a company that's going to go down. They could be also shorting it. I don't know what their short holdings are and how that works from that standpoint, but this should give you an idea. The total number of sellers versus buyers: the buyers are 1.158 million. The number of sellers are 2.201 million. So there are more sellers right now than there are buyers in this stock. So what's going on? Let's look at it from a year ago. Go back in the Wayback Machine. Yes, it would have been great if you would have bought this in 2020, but nobody knew the pandemic was coming either. But the interesting part is that this company started in 2020 at $7.20 a share. Look at where it ended up last night. It was at $34.10. Now, it's gone down quite a bit. If you look at the graph, you can see that it's fell quite a bit from where it has been in the past couple of weeks, but it's still up 373.61%. Now, look, I've always got to remind you all of this, that when we're looking at stocks, the past performance is never going to be a guarantee of the future results. Now, I'm going to stop for just a quick second. I've been talking really fast here for a minute, and I want to thank our sponsor. Our second sponsor of the day is actually Advice for Life Insurance. Your family needs you, and you can protect them with life insurance. You can find the best life insurance at the lowest price in less than 5 minutes at Advice for Life Insurance. Now, let's talk about the bullish aspects going forward on ExOne. Here's the good part. The bulls can be roaring on this stock. They have to get it up over 300% for the year. The company creates detailed parts at a lower cost compared to traditional manufacturing methods. That is significant. That's a big bullish aspect. And if you're thinking, what's the potential for this company? It's this. If they can overcome the problems with the COVID-19 pandemic, and they can get their products out there on the market more, they can show that they can possibly outperform traditional manufacturing methods. The other thing is too that ExOne does have a proprietary asset, which is their binder jet technology. That's actually a heatless technology to bind together different industrial grade materials to make different parts for industry. And then the third thing is, as the pandemic subsides, the bullish investors are thinking that sales and manufacturing are going to be positively impacted. Okay, we always have to look at the bearish aspects, don't we? Yes, we do. The bears can be roaring on this because this is a risky stock. We don't know what's going to happen. One of the biggest things going forward, we talked about it from the very beginning, and ExOne has they've acknowledged that COVID-19 has been a significant hindrance to their company going forward. The second thing is there are other companies, there are big players out there. HP and GE could overwhelm a company that's the size of ExOne. They do have the potential to do that. GE actually has an additive division of their company that could compete directly with this company. So we have to be careful of it from that standpoint. The other thing is, realistically, if you've gone up 300 and some percent in a year, your value of your actual company might not be reflected in the value of the stock. And that's why right now I think that we're seeing a lot of shorting that's going on. There's more short sellers right now than there has been 2 weeks ago, and potentially that could be increasing. We'll have to keep an eye out. Everybody has to keep an eye out and look forward to March the 12th for their earnings call. So what are some of the analysts saying that the potential value is on this stock? The current value at 34.10. Let's look at what the algorithm tells us from Morningstar. Now remember, Morningstar only analyzes maybe 1,000 some stocks, something like that. They can't analyze every stock that exists, but they do have a sophisticated algorithm that analyzes all of the different fundamental aspects of the company, and they give you an opinion. Their opinion on this stock is that it's really valued at $31.51, so it's only trading at about an 8% premium. Their star rating rates it as 3 stars. Remember, the star rating is not like the Michelin stars that restaurants get, that the higher you get, the better it is. The valuation of the company is really what indicates the number of stars. A 3-star company is going to be pretty fairly valued. A 1-star company is going to be significantly overvalued, and a 5-star company is going to be significantly undervalued. So let's look a little bit more. What are some of the different analysts saying? There's really only 5 analysts out there right now that are following this stock, and most of them are saying that this company is a strong buy. We've got 4 saying yes and 1 saying hold from that standpoint. So let's keep going on though and look at how this company competes against other companies that are similar to it. Now, what I did is I went and did a little research and compared it to other companies that are 3D companies that are out there. There's another company which is called Nano Dimension. They are a 3D company, but they're different than ExOne. ExOne deals mainly with industrial components. Nano Dimension actually deals more with semiconductors. So they're different companies. Both are 3D. So when you see them in the news and it says 3D printing, don't be fooled. They don't do the same thing exactly. Another company that does compete with ExOne is 3D Systems. And then there's also Desk Metal and VoxelJet, which is a German company. And if you're looking at the spaghetti graph that's in front of you, you can actually see that ExOne has performed better than all of them, except for Nano Dimension. But remember, Nano Dimension is more involved in semiconductors. Now, how competitive is this company compared to its sector? That's the next thing that I want to do, is compare it to its sector. Their sector is specialty industrial machinery. And if you're looking at the graph that's in front of you, you can see that year to date, that's from the beginning of January till now, the company is really up about 259%. And if we compare that to the sector's, well, they're beating the sector hands down. The sector's only up 3.38 in year to date. And when we look at it compared to the entire market, it's only up 2.38%. Now, what are some of the price targets that the analysts have that are out there? I find this is very interesting. B. Riley is a analyst that issued a neutral rating on this company. And they've got a very wide anticipation for value. Their value is going on right now in between $10.50 and $44. Canaccord Genuity is looking at 18 to 59, and the most speculative analyst out there right now is going to be Oppenheimer. But Oppenheimer's analysis is not as recent. Oppenheimer's analysis is from November of 2020, and the rest of them are actually in 2021. Now, it's interesting, if you're looking up some different information as far as like the company going forward, Stifel Nicolaus is actually the company that is underwriting some new issues of ExOne stock, and they're putting a price target really on this stock at $20. Now, if they're the ones that are issuing new stock and they're looking at it at $20, they're looking at it right now as being overbought. But B. Riley is being more optimistic and looking at it from the standpoint of $44. Now, I want to compare this and just give you a little bit more detail on what B. Riley said. Their investment analysts lowered their 2020 earnings estimates for ExOne in their research notes that were issued on Monday, February the 8th. So that's pretty recent. They're forecasting earnings. There's still going to be a loss, but the loss is going to be comparable to what last year's was, around 78 cents a share. They lowered their rating of the company from a buy to neutral, and their price objective is going to be $44. So that's actually a positive from that standpoint. They're estimating that the fourth quarter earnings, now look for this coming up on March the 12th when the earnings call comes out. They're looking for earnings per share to be a loss of 14 cents, and they're looking for the whole year of 2022 to actually be a loss of 22 cents. So that kind of gets us to this point, ladies and gentlemen. If you want to buy this stock, how do you feel about the stability of it? How do you feel about the earnings, and how do you feel about the competitiveness of it? It's really very difficult to tell in how this is going to go forward. I think there's a lot of speculativeness in this stock. There's a lot of risk that's involved in it right now. I think that it's a great industry, but I'd be very cautious of the value going forward. I'm not sure that I would be buying into it right now personally, but I'm not here to tell you what you should do. You have to be able to identify what you're going to do going forward. Okay, great. Well, I think that brings us to the very end. We had a few comments in the tenors. I want to thank you. This is actually the stock that you recommended. If you have a stock that you want to hear more about, I hope that you will let me know about that. Put it in the comments and write to me. Let me know where you're writing to me from. If you're listening on a podcast, go over to YouTube and let me know what stocks that you'd like to learn more about. And I'm thinking also about putting together a class that's going to be on YouTube or another thing like that. And I'm kind of interested in what you would like to learn about finance and investments. So give me some thoughts. I know that someone just wrote about why no one's talking about Facebook. We're not going to get into that today. That might be something for another day, but we're at the very end right now. So I want to say thank you very much. And hopefully I'll be back to you next week a little bit more regularly as I get back away from the cold weather and into the warm Texas weather. We're about 75 degrees here today. So I'm hoping that that sticks around. Stay around for the disclosure at the very end. If you're listening on the podcast, it's coming up. Have a great weekend, and we'll talk to you next week.